Have global equity indices run out of steam? There had been speculation amongst some that there was another record in the US market some point of the early part of this year, which we now seem to have had. But having hit that nadir, what are the charts telling us? Well, Serge Berger joins us now from thesteadytrader.com. Serge, good to talk to you again. Looking amongst your videos, you picked up on some interesting technical moves on the US markets earlier this month. I just want to quickly run through this again if I was in the context of the recent highs that we've seen for the S&P and the Nasdaq. What are your thoughts on where we're going? And from a technical point of view, what are you pointing out?
Hi, Jeremy. Yeah, so what we've seen for the most part for 2019 thus far has been essentially dealing with a real sort of talking up the markets from the Fed, and it's, a lot of it's politically inspired. But what we're seeing now is we continue to see sort of this real narrowing of the trading range, and through the lens of technical analysis, through the lens of really investor psychology, what we've been seeing over the past few weeks is the range to the upside is getting increasingly narrow, meaning volatility was extremely compressed, meaning people have gotten extremely complacent. Now on the weekly chart, you can see that the Nasdaq 100 has already started to break that sort of rising wedge to the downside, and we're seeing this not just in this one, but across really the spectrum of risk assets, the same pattern.
Okay, that's the Nasdaq. I know you've also been following the S&P 500. Does the same pattern apply there to the S&P? Of course, another index that has hit recent record highs.
Exactly. It's the same pattern in the S&P 500, which is not surprising considering the high correlation within equities as an asset class. What's notable in the S&P and actually in the Nasdaq 100 we looked at a minute ago is that these rising wedges are coming to a head just as the markets attempted to break to fresh all-time highs, which coming from a major undershooting in December to a sustainable breakout is basically unheard of. So there needs to be at least some churning, in my opinion, probably some testing to the downside before we can attempt any more rally.
Okay, so in the updates I've been giving to clients here, I've been talking about the opportunity to take a bit of air out of the tires. But one of the interesting things I think about these rising wedges is just precisely how to trade them. We know from experience that a rising wedge ultimately resolves on the downside because it's a bearish pattern that develops. How do you measure the distance and how do you trade this? When you break out of the bottom side of a rising wedge, how far are we expecting it to drop?
Yeah, so that's a great question. Now, I always tell people, trading, I think, is ultimately a bit more of an art than a science, although there certainly are scientific things to it. But look, at the end of the day, the way I look at it, when you look at an index particularly, because every asset class has a different volatility, I like to see about a 5% move to the downside. Or you can look at it from a Fibonacci retracement perspective, which means you take your Fibonacci retracement tool, which most platforms have, and you just measure it, and you're looking for about a 23% retracement from the highs of the wedge of the entire move. So if this entire move from down here to up here is 100%, then a 23% move to the downside of 23% of this total of 100% is about the first target, the way that I look at it.
You've spoken there about, and you brought up a couple of examples of the US stock indices. How about one from another part of the world? Does this still sort of follow out from other markets?
It does. I mean, you can look at the Hang Seng, for example, and I'll make this a weekly chart so you can see the same pattern. You can see what's happening so far here. We're breaking out of these narrowing trading ranges. Now, it is noteworthy to your previous question, Jeremy, that just because we're falling out of this range doesn't mean we can't have a retest first of the sort of toppling off of the pattern. So we could see this before we then head lower again. So that's entirely possible within the historical sort of tendencies of these rising wedge patterns. But nonetheless, they all tell us the same thing, that complacency has gotten extremely high up here, and people were chasing things higher in a really narrowing volatility range.
Yeah, look, it's an interesting technical point to make. But thanks indeed for joining us, Serge, for our regular updates there from thesteadytrader.com, and you can catch up with more from Serge Berger on his website, including some of the videos that he regularly produces for technical analysts and traders alike.